Welcome back to the Alex Helton Real Estate Show. Obviously with me, Alex Helton.
Here we are.
Sam Dahl. We've got for you the February market update. We're going to go over the stats and info from January 2023. Some interesting things. Feels like a little bit different than some of the months that we've seen in the past. But first, quick shout out. Rob Smith, Adam Darby partnered with us on our podcast.
Yeah.
Give me one thing you love about Rob and Adam each.
So one thing I like about Rob is that he's educated, and so meaning he stays educated on what's going on in the market, what things impact rates. He sends me links that I find really helpful that help us educate our team and our clients. And I know over the years, a lot of feedback that I've had from people is that he has a really good grasp on when he's talking to somebody about getting a mortgage on a home. Here's what your options are, and he's able to explain those in a way that makes sense. I think that's really valuable. Adam, I got in my car not too long ago. We didn't talk about this offline, but I think you remember it. Got into my car wouldn't start. Actually, it would start, it wouldn't go into drive. And it was a mystery. I didn't know what was going on. And turns out a rodent had gotten up into the vehicle, not inside, but like in the engine, nibbled on some wires.
Delicious.
And so, I think it ended up being, I don't know. It was a
lot.
I don't know if I should include how much it was, but it was a lot. It was a lot for them to fix it at the dealership. And so they fixed it. And I really didn't think about it until I was there. I was like, man, I wonder if this is covered by insurance. So I call Adam, and everything was just totally taken care of, 100%. Mm-hmm. So that was nice because his rates are really competitive. And the fact that there's one relationship for all of our insurances and they pay is good.
Yeah.
So
it's not a hassle.
It's kind of the point.
It's not a hassle to deal with Adam. He's got great customer service as well. Same with
Yeah.
Rob. So, all right, January, interesting month.
Yeah.
So why don't you give us some of the stats, details
All right.
first, kind of on a raw level, and then let's talk about some of the implications.
Okay. So the real estate weather.
Yep, here we go.
The real estate weather for January. So in Davidson County, transactions are down 36% over January of last year. Man, that's pretty significant. Yet values are up by 7% in Davidson County since last January. In Williamson County, closings are down 26%, and appreciation or median home value is up by 17%. So two things just to kind of point out there. One is that when you have that many, when you have a drop in that many transactions, it feels like nothing's happening, and it kind of feels like things are crashing. Mm-hmm. Regardless of what values are doing, it's just like, man, nothing is selling.
Right.
So things must be really bad.
Right. I'm seeing more signs stay longer in my neighborhood.
Days on the market is up.
So it feels like, oh, nothing's selling.
Right.
This home's probably worth zero.
551 sold in January. Definitely down, but yes, things are staying on the market longer. And we'll get to some of those other numbers after we go through inventory in terms of settle list price. So Williamson County, so that's the first thing, is that transactions are down. It just feels totally different. You're not hearing about as many people. You're seeing signs stay in the yard longer, that kind of thing. The other thing, just to point out, is that Williamson County for a long time tends to appreciate, or at least the median price tends to be in the range of 10% higher than Davidson County, and that seems to hold over time. So Davidson County is great, and Williamson County performs better. Mm-hmm. So
it is interesting to me. I think this is the first time, maybe since we've been doing this, that this number here, this price growth year over year, is in the single digits.
Yeah,
which is normal for real estate. Like historically, we expect maybe 3 to 6% growth, mm-hmm. 3 to 5. But we've been in such a crazy, hypercharged market that for a long time that's been double digits. Obviously, it still is in Williamson. but the market slowing with some of the interest rate stuff that the Fed's been doing does seem to be, we're kind of catching up to normal real estate. It kind of seems like. So.
Not a bad thing.
Yeah.
I think it's a good thing, certainly long term. So Davidson County over the last 3 months compared to the same period last year, transactions are down 40%.
It's a lot.
It's a lot. It's a lot. Price appreciation, median price is up 11% in Davidson County. And then in Williamson County, again, transactions are down, not as much, 33% over the last 3 months. And median sales price is up 20% over the last 3 months.
Kind of that's a lot of this is the same story we've been seeing for a while.
Yeah.
The last couple months where closings are down, price appreciation has started to slow a little bit. Like there was a time this was at like 35%. And we said at the time you buy and sell in the same market. That's still the case.
Still
for
the
most
case.
people.
Yeah. Up or down.
Even though, things are showing some slowdown aspects, there's a lot of benefits to it.
Yeah.
All right, tell us inventory, Alex. What's going on there?
Inventory in all price points in Davidson County, we are up, not significantly in any of them. It has just ticked up a little bit. Again, 6 months, 5, 6, 7, that's when we really see a stagnant market where prices aren't going down, they're not going up. So until we hit 5 or 6, you're going to typically, we're going to see, it'd be really unusual not to continue to see prices going up and see these numbers to be green. In Williamson County, similar story, except in the 500 and under price point in Williamson County, the inventory is down a little bit.
Which partially, there's very few homes just in general under 500 in Williamson. It's such a tight market that you see, when it goes down, it's not necessarily indicative of a trend. It's just sometimes the timing of so few possible
given the median
sales.
price here, and the 500 and under, I think I think it's possible to see these, 5, 6, 7, 8, and this still to be significantly lower.
Right.
Now that we're at that median price under 500, there's just not a lot of them, and there's always going to be a demand to get in Williamson County under 500.
In almost any market you can imagine, someone's going to buy a Williamson County home for under 500.
Yeah.
So, kind of to your point there. All right, so some of the same story.
Yeah.
Some differences, like the median price is lower than we've seen. Monthly, we don't want to put too much stock into it because, February could be right back up to the 450 range.
So for our viewers in context, we have seen this to be close to 450?
Give or take, 5.
The last 12 months or so.
It's bounced kind of, especially the last 6 months, it's settled in at about 450, give or take.
Yeah.
We haven't seen a dramatic drop. We haven't seen dramatic gains.
Yep.
Just depends month to month. So this is the first time the number has fallen or bounced.
More than 1%. This is about,
pretty much.
5% or so. We've seen it fluctuate within just a few $1,000s up and down. But this is the first time we're seeing it, call it a $25,000 dip. Not totally unexpected. If you rewind to 3, 4, 5 months ago, we're talking about where are interest rates on 30-year mortgages. They were up at that, several months ago, they're up at, close to 7%. And we're going, man, it's going to be a cold winter. Transactions are going to be way down. I'm telling, there's people that disagree with me on this. For our clients that need to sell this, our clients that need to sell this year, I think first quarter is the worst time to sell. And this is why. This is why. On the flip side of that, what does that mean for buyers, Sam?
Potentially that it's the best time to buy. Potentially. Probably.
I think so. We've talked about for buyers that are looking for a good deal, now is the time. And for people that are waiting for a crash, if there's a crash, this is it. This is it.
Yeah. The hard thing, again, month to month, we put very little stock into.
Yeah.
We talk about no one can time the market. No one actually knows when the bottom is or the top, until a couple months later you look back and you go, oh, there it was.
There it goes.
So we don't really know where this is going to fall sort of on the graph,
Right.
but there is a convergence of factors that make it seem like if you're a buyer that wants a deal, or at least wants to feel like you got a deal, now's probably the best time that we've seen, and maybe the best time that we will see. So we've got kind of a 3-month window, which you mentioned.
3 to 4 months.
Tell us a little bit more about that, some of the things that make you go, hey, if you've been waiting to buy and you've got the flexibility, maybe if you're just a buyer, what makes now the window?
So I think what makes now the window to buy, if I'm in the market and I've been waiting for a crash and I'm a deal buyer where no matter what, I just have to feel like I'm winning. I got to feel like I'm getting a good deal. And I don't want to feel like I'm going to regret buying, 12 months later.
And maybe don't want to get in a competitive situation, or maybe you don't have the financial flexibility to outbid somebody.
Yeah.
So
this, and I know we're talking about it on a month basis, so we're not putting a ton of weight in it. However, this is not totally outside of what we expected, and expect to continue to see maybe for the next month or two. Then what's going to happen to interest rates? The prediction based on the information that we have is that interest rates in the summer are going to be 5.5 tops, possibly 4 3/4, somewhere in that range. When we're in June,
did you just say 4?
4.
Did I just hear 4?
4.99.
Okay.
All right. So June, July, August. So what's going to happen then?
Well, typically, if we just look, if someone
none of our viewers are going to do this, but everybody that doesn't watch this, they only do what everybody else is doing. Right?
Only smart people watch this.
That's right. When everybody's in the market, they get in the market. When everybody leaves the market, they leave the market. And so if you're going to be a smart buyer, you're studying, you're knowing what's going on, you're anticipating, you have a pretty good guess. Obviously, nobody knows for sure, but you have a pretty good guess of what's going to happen, and you get ahead of that.
Right.
I think the next 3 to 4 months is going to be, so February, this month up until probably through April, so February, March, April, and then maybe May. And so you have prices. We talked offline, the sell to list price is as low as it's been in 5 years.
Meaning, for people that it's not obvious, if it's listed at, easy math, 100, over the last 5 years, typically somebody's getting 98, 99.
Yep.
This, in January specifically, they're getting 97, 96.
Yeah.
So the gap between where it's listed and what it actually sells for is bigger than it's
So if you're buying an $800,000 house, an $870,000, $900,000 house, you're getting it, 4 to 5% under the list price on average, rather than, list price or over list price. So,
I mean, there was a window there where we had to tell people the price you see is the starting price.
Right.
And if you can't handle the starting price, it's not even worth pursuing that home.
Yeah.
Now, sometimes that's the case, but there's definitely some flexibility and some options.
Yep. So you have two things going on. Prices right now, lack of competition right now, and based on what we anticipate happening in the summer, interest rates in the summer, I think that you're going to see demand really kick up, and you're going to have a lot more competition. And I think it's possible, if we hit for anything, you're going to have people that refinance that say 3.5. We know of people that were at 4.25, and they just, for whatever reason, they didn't refinance when things were at the bottom. They're busy, they're doing their thing, and they don't refinance. And so you have a lot of sellers right now where the gap between, okay, I've got a 3.5, and if I move and get a 6.5, that's not worth it. Well, when that 6.5 becomes 5.5 and potentially 4 anything, people go, well, I don't like it, but I'm going to deal with it because I want more space or I want a different school system or whatever it may be. And all of a sudden now it sort of unlocks this new supply of homes from people that are going, hey, now I'll move because I'm willing to do that now. And so you have these home sellers that are otherwise right now not on the market. So I think there's going to be an uptick of inventory when that happens, but I think the demand is going to far outweigh it. I really do. All those sellers are going to have to buy, so it's a little bit of a wash.
Right.
So now's the time to buy.
Now's the time. We did see last month, we talked about how in December there were fewer new homes that came on the market than in any previous month in the last 15 years.
Yeah.
And so the inventory was keeping pace with the lack of demand, so to speak, keeping prices stable. In January, we did see that new listing number bounce back up. So you had partially why the inventory is starting to creep up is because you did have more new listings coming on the market in January. We'll see what happens in February as far as closings, if the demand keeps up with those, or maybe we see the inventory continue to rise if that demand doesn't match the bounce in new listings. So interesting. So 4% is possible for the spring.
Not 4%.
Sorry, in the fours.
In the very high fours.
Not 400.
That's right.
4 point something.
Yeah.
All right. So if I'm a buyer though, and I'm looking, the rates last night were 6.3 to 6.4.
Yeah.
If I'm a buyer and I hear they're going to be in the fours,
Yeah.
it does feel a little hard to stomach buying now.
Right.
My gut,
Because you're locking in a 6.3, 6.4.
yeah, my gut says I should wait till it's 4, Alex. So I know you said that there's these other factors, but I think what you're saying is you may end up with a lower payment now by getting a better deal on a house. And if it makes sense to refi in the summer, you can do that if they do go down.
If they do go down.
So
Yep.
there's some costs associated with
And
refi.
it all goes back to, if you have any real estate questions, give me a call and let's talk about it.
Because every situation's different.
Every situation's different.
You can't prescribe market-wide.
And so it's helpful to point out that most of our clients don't think totally like, I'm totally making my decision based on rate. However, having the conversation around it, I think, is helpful to kind of get to, in some sense, how people are behaving right now. So I would say go for it. And if rates, if you can afford it and you want it and you have a good reason to buy, go ahead and pull the trigger. I really think you're going to see a lot of, again, nobody knows for sure, but based on what we do know, our expectation is that rates are going to go to 5.5, potentially even lower in the summer. And when they do, you're going to have more competition. So it's all risk and reward. If you buy now, you have less competition. So you wait, you're going to have more competition. So you're either going to miss out on homes or you're going to pay more for them, period. Period.
It's that simple. Great time for a cash buyer right now.
Here's the upside. The upside is I know that I've got the best possible rate if they actually hit 4.99 and I waited.
Yeah.
But I would say if that's going to happen, then buy now and refinance.
Right.
Buy when there's no competition and get literally the best of both scenarios.
And rates are similar to home prices where you don't know where the actual best rate is until it's gone. Rates were in the 5s a week or two ago. Jobs report comes out.
Right.
It's like insanely good, I guess good.
Yeah.
There's a lot more jobs than expected, which bounced rates because...
It's weird when good news is bad news.
Right. Well, yeah, and typically, like good economy,
Bad
good
for rates.
economic data means rates are going to go up a little bit. But so nobody knew that was everybody felt like, all right, the trend is going down. We'll probably keep kind of stair-stepping down into the 5s.
Yeah.
Jobs report comes out. Here we are back at between 6.25, 6.5. So overall, trying to time anything, not the first piece of the puzzle.
Yeah.
Cash buyers right now, great opportunity. You can make deals. Quick closing is probably more valuable to sellers now than it has been in the past, because you've got some sellers whose homes have been sitting. You know, when your home sells in one day,
it's time to get a deal. It's time to get a deal.
Yeah.
Some of our clients, they'll set up on, they only look at homes that have been on the market for 3 weeks, 3 months, and those are the ones you get make an offer on, and you get, get the best deal you're going to get. I mean, you're going to have to probably make more than one offer, but that's okay. But yeah.
Cool.
So,
any last thoughts on January? Summary so far, now's the time for a deal.
Yeah.
If you're looking for one, probably got 3 months before we see enough movement the other way that it feels different.
Yeah.
Also, I'm thinking here, like, if this is the crash, it's a pretty mild crash. I mean, people are waiting for the bottom to fall out.
It's what we talked about, though.
It's kind of like it feels like a pothole. We just kind of like bump down and
it's what we talked
cruising.
about, though. It's no different than what we expected, based on supply and demand,
Right.
based on the fundamental differences of 2022 versus 2008, and so it's not a surprise.
Yeah.
So
Last thoughts or
That's
things
it.
you want to share? Awesome.
That's it.
Mention real estate reviews for anyone that would be helped by that.
Yeah, if you would find it helpful to review your real estate, what your home is worth, whether or not a home equity line of credit makes sense, whatever it is, we offer to sit down with you and just kind of review. Really, it's a collection of things that people have asked us questions about over the years. It's almost FAQs on everything real estate related, including, hey, we're thinking about doing an addition, or we're thinking about doing a renovation. I find that just a couple of conversations on how best to do something can really make a big difference in value when it comes to additions, renovations, that sort of thing. So if you would find that helpful, give us a call.
All right, guys. Thanks for watching. Appreciate you liking and subscribing to our YouTube channel. Follow us on Apple Podcasts, Spotify, or wherever you are listening. And we'll see you next time.
See you later. Thanks.